So we are live, guys. Welcome to the Independent Investor channel. This is where I go live and I provide some direct help for my subscribers to the channel. We're probably providing, again, more value than 1,000 suits and ties. Honestly, because ever since I started the Independent Investor channel, I've been trying to spread a word of the prospects of investing on your own. And I want to give it a few minutes here for the group to come in here. I do this every week. So if you're new to the channel, certainly I encourage you to subscribe to the channel. Our message on the Independent Investor channel is very simple, and anybody can resonate with the message. I'm a hardworking guy. I don't do YouTube for a living. I come on here every Friday night really just to provide a little bit of direct help. I've got some guys coming in. Hello, champ. I'm back. Hey, I had a good day today, man. I had some good news moving up in the world a little bit. So I'm going to let the guys filter in. I've got Les Gibson on the line here. I've got Greenhorn, Grill and Smoker, my restaurant owner. So I'll let the guys come in and have a chance to filter into the group. I kicked it off just a touch early tonight. Because I'm like a big diesel engine. It takes a little while to get it started and warmed up. But once we do, I'd like to provide some clarity. I did make some moves this week in the stock market. We're certainly in a little bit of a range, dealing with some geopolitical risk this week. I actually think we've reduced some of the risk, hopefully, with the tariff talks with China. I'm really kind of hinging. I really hope we break through and make some progress with North Korea. Extremely sad day today with the tragedy in Texas. I don't know what we can do to try to, make our world safer. No doubt about it. I really am just stunned at what's going on. I really don't have a whole lot of comment other than, my thoughts go out to the victims, certainly. I mean, I used to live in Texas. And I used to live in Oregon, and in both of the states that I've been involved with, we've had two tragedies. So honestly, it's hitting way too close to home and it's got to stop. So I know collectively there's a lot of people that are thinking the same way as me, because there's a lot of good people in the world. But I tell you what, there's obviously way too many bad people as well. And there's no excuse for it. Just hits way too close to home. We rack our brains trying to help people and, give people a little bit better of a life, and it's just terrible to see that happen with the kids, I wish they'd put me out there, man. I'd guard the school any day, no doubt. It's probably what I might, if I had the means to do so, man, I could probably collectively pool together a nice coalition of people, man, that could get together and put some safeguarding on these schools, I just don't know what the solution is, man. I went to the gym and worked out tonight, and that's all I could really think about is trying to provide some level of solution. But certainly on behalf of the channel, the thoughts go out. There's really no remedy after something like this that can be offered, but certainly condolences is in order. Let some of these guys, I've got True Financials on the line. So he's one of the channel creators. Kind of been doing YouTube. It's always send a shout out to the channel creators when they make their way in here. It's always a big help to me. So True Financials does a great job on his channel. So very cool. It's really nice to see you guys. I've got Faceless HD. What's going on, guys? You guys can start rattling questions. I don't script any of my videos, so you guys can start rattling questions. I did pick up some stock today. For your guys' awareness, I picked up Alibaba. I picked up 15 shares, relatively small position. It's a position I've been wanting to take for quite some time. I do own 5 shares of Amazon, but I figured I might as well pick up the Chinese play in Alibaba. So that is a long position for me. I also picked up some blue chip stocks this week. I picked up 2 huge companies. I picked up McDonald's today. I bought 30 shares of McDonald's today. And I also picked up Home Depot before earnings. Unfortunately, they had a rare miss on their earnings this week. but I don't mind. I took it as small downturn, a couple points. It went down. It adjusted after earnings. But I've had a few engagements this week with some interesting questions from folks. They've really resonated with me, and I'd like to premise what I tend to focus on the Independent Investor channel is not necessarily the assets that make up the account, but the account itself. I think really that's the fundamental message that I want to get across to the subscribers that join the channel, is to provide an introduction. If you've never heard of self-directed investing, or you've never heard of a self-directed account, we need to try to blow out and share that terminology with folks. I know there's a lot of folks, and when I heard about it, I had been an investor for 15 years. So I've been self-directed investing for about seven years now. And I've been able to grow my portfolio to up over $300,000 now. So I'm really trying to provide a testimonial. I make less than the median income in the United States of $55,000. And I make less than $50,000, and it is a single income. So make no mistake about it. Doing what I can do for spreading the word to the blue collar folks. I'm going to be talking about and making a video on investing for country folk, because I actually think this may actually provide a lot of benefit who don't have direct access to a financial planner. And for a lot of people, a lot of folks just assume that that's the only way to invest, is to seek out their services in the stock market via a financial planner. And we're here to provide an additional option. I was with a financial planner for years. I learned a lot of good information from those planners. But at the time where I actually cut ties with my fourth and last financial planner, that's actually when I became a self-directed investor. We teach along the passive lines. I know there's been a lot of folks who have hit me up this week and talking about, different assets in the account and different Vanguard funds. I've had some really good dialogue with one of my new subscribers actually about the features and functions of Vanguard specifically. Certainly, and I know there's a lot of new investors out there who are looking to identify, which brokerage account to go with. And, hopefully we can help answer some of those questions before you guys pull the trigger, because I know True Financials, I watch a lot of his videos and he does a really good job. And I think you probably agree with me. The more you can minimize mistakes in the stock market, I think the better off you'll be. I mean, you've got guys like me who probably have made every mistake under the book. Now there is value in making mistakes in the stock market, because there's probably no better way to learn. But I would just rather provide you guys with the intent and the message of, the lesson learned. And that way you guys can kind of avoid it and jump right to the right way to invest. And if you guys can resonate with the message and you can validate for yourselves quicker than, sooner than later, to try to understand why we invest the way we do in a self-directed retirement account first, and look to add a brokerage account, of course. And if you guys are working with 401ks, I see one of you guys have got 457B in your guys' retirement account through your employer, then that's perfect. We're looking to set up multiple money machines in your guys' portfolio. Guys, thanks for coming into the group. Welcome to everybody. If you guys are subscribers to the channel, I'd like to thank you for coming and supporting the message. This is more for your guys' benefit. I love doing this. I don't script these live feeds at all. There's no reason to do that. I like to have an open dialogue with my folks. And this kind of gives us a consistent schedule to where if you guys have ideas about moves that you've made this week, please allow that to be put into the group there, and we can kind of openly discuss it. I openly discuss my stock moves with you guys. So those were the three that I made this week. I thought I made one more. I couldn't really remember. If you guys are invested in John Deere, congratulations. Hold the stock. I was very tempted to try to grab onto its coattail today, but anybody who grabbed John Deere, they actually missed both on earnings and revenue. Stock shot up $10 a share. That was all commodity increases, which they'll pass on to the customer, and their forecast for growth going forward is actually very favorable. So I do need to add a little bit of industrial exposure to my portfolio. I'm looking at about 6% right now. My biggest industrial holdings are 3M and UTX, United Technologies. United Technologies being my favorite. I've owned it for years, and 3M is a new position I take. So I'm going to start to scan through some of these questions, guys, and let's start to engage and get into it for you guys. You don't need to sit here and listen to me rant on. See what we've got here in the group. I'm going to scan through. I need a bull as a beginner. I fell in love with the stock market and want a bull and a bear since my traders have that. Yeah, I got to get over to Manhattan. It's been pretty snotty weather here, actually, in New York. It's been raining every day. It's been horrible. But I actually kick over to Manhattan every week. And I'm actually, one of my subscribers hit me up with an idea to grab some bulls and actually auction those. Give those away to my subscribers. And I'm going to actually take her up on that idea. I think it's a good idea. Now, I can't do that with the bull that's behind me. I can't do that. Those run around $65 off the street in lower Manhattan. So it will be a miniature version of it. So I can buy multiple and I can try to provide that just as a thank you. You guys are kind of my community, and a lot of you guys have grown with me since the beginning. You guys know a lot of the success on the Independent Investor channel is built upon referral and referral alone. So I thank you for that. Certainly this is information that's worth sharing with friends and family. Okay. All right. Statue. I knew what you mean. I knew what you meant. Are you interested in AT&T? It's yielding over 6%. It's really cheap. The answer is yes. I'm already a shareholder in AT&T. I own 100 shares. Okay. I've been dividend reinvesting AT&T since I've owned it. I actually bought it in the mid 30s. It's actually retraced back to the low 30s right here. So if you guys are looking for one of those cornerstones in the portfolio, it's really in one of those sectors that's been kind of beat up. AT&T, Verizon, Comcast. You guys are well aware of the Sprint and T-Mobile deal. I think that's going to be wonderful for T-Mobile. I think it's going to be great for Sprint. I'm with Sprint as my carrier, and I don't think they can get any worse, to be honest with you. I think Verizon takes the cake as far as proper service. I do own Verizon as well. I do own Comcast as well. Comcast is trading at around 6.5 times, guys. It doesn't get any better than that. And Comcast is way too good of a business to be trading this low. So I do own all three right now, but I do endorse AT&T. And if you guys are looking to take a good position in AT&T, I mean, gosh, guys, you're looking at 300 at 100, cut it in half. You're talking about 50 shares at 1,500, 25 at 750, $750, to buy you that much of a stock position is actually very attractive. You sit on the 6% yield, set it up for dividend reinvestment. We talk about that all the time. Guys, I always try to bridge the link about what we talk about just as a normal on this channel in self-directed investing. Make no mistake about it, dividend reinvestment is something that a managed account will charge you to do every month, month in and month out, year in and year out, okay? So if you guys are going to put these cornerstones in your self-directed account, make sure that you're setting them up for dividend reinvestment, and you're going to be able to realize the benefit of that not being charged in a self-directed account for those services. Dollar cost averaging, it's the same thing. They're going to charge you to do that. They're going to charge you a base flat fee for every dollar that's allocated to that investment fund, okay? So you got to be very, very careful. It was 5.75 with me. It didn't matter if I put $20 in it. It didn't matter if I put $100 in it. They were taking 5 3/4 basis points every single month on every single dollar that I was putting in that account. And that is unacceptable. No way. We work way too hard for our money just to give it away to a bunch of money managers so they can put more commercials on TV. That wasn't meant to be funny either. That kind of was. AT&T, I have my blessing. Remember the telecom exposure. In any portfolio, we're looking at 3%. Okay. All right. And he says, by the way, glad you bought McDonald's. Yeah, I've made the mistake of trading out of McDonald's. I watched it go to the moon. I think they're really doing some great things. If you guys actually go to Europe, the funny thing, man, I was in Paris. I was walking Champs-Élysées in Paris, and it was so funny to see all the fancy restaurants up and down Champs-Élysées. And McDonald's was the only restaurant with the line out the door, right? So I've got my kids with me, and I take them in to McDonald's in Paris, okay? And it's really cool because they have the kiosks that you can actually make the order from, and it's really, really easy to do. They don't have that in the US just yet, but I think they're actually going to streamline their ordering process. And this new CEO, he's all about integrating technology into the program. Not only that, but McDonald's is kind of a no-brainer. It's just a name that I want to own. It's a 2.5 dividend payer. Trades at about 21 times earnings. It's part of the discretionary. There's only a couple of staples right now that I feel like are worth going after. It's just Costco made its leap this week, and I did not want to chase it. And then Estee Lauder is my other staple. Of course, you guys know that I'm long-term holders of Kraft Heinz Food. It's been obliterated, Procter and Gamble. And I don't know if I see any type of relief in the near future for staples. But certainly jumping into those good stocks now may give you a good entry point, but I can't promise that we're at the bottom of the consumer staples. They are extremely out of favor right now. All right. Greenhorn hits me up. Started my 457 today. Would you recommend a mimic of the S&P 500 large cap and a mid cap with some international investment option with Nuveen International, or stay with a straight mimic of the S&P 500 large cap? All right, you put a ton there. I don't necessarily recommend so much mimicking. If you've already got those holdings in the 457B, make sure that you build that up as your baseline. Now, I'm assuming that you have in your 457B the function of company matching, okay? So you always want to contribute to that 457B in a manner that provides you the maximum benefit as far as your matching funds, okay? So if it requires you to contribute 5% for a 5% or a 4% match, then go ahead and do the 5%. Now, any overage over that, you're not going to get matched on, okay? So make sure that you're doing the maximum contribution for the maximum match, all right? And then stop it. Take whatever additional monies that you have and roll those into the self-directed Roth IRA account. Now, within the self-directed Roth IRA account, you have two options, okay? You can either go the ETF route that you talk about, all right? You can do some small and mid caps. You're asking me a very vague question because I don't know what the holdings are in the 457B. Just like a 457B, 401ks can be very, very spread out and very, very confusing. They give employers all kinds of different options for their employees. And if the employees don't go into their accounts, right, into their retirement accounts and actually look at what they're investing in, you really run the risk of being invested in something that you're not interested in being invested in, okay? So you have to be aware of what you're invested in. But the 457 can provide you that diversified base, all right? You're continually dollar cost averaging, you're continually funding that account going forward, and that's a beautiful thing. Now, what that does is if you have that account over here, it allows you to be a little bit more aggressive on the self-directed side. Now, you may do a large cap ETF, S&P, if that's your thing. You may do a total stock index. There was a one comment this week that I got on a really good fund offered by Vanguard as well. It was a little bit more of a diversified portfolio offering. Expense was a little bit more, but all those are good options. All of them are good options. But don't forget the option, if you fancy single stock investment, to go ahead and put some of those blue chips. I just heard, I've seen a lot of Warren Buffett in the last 2 weeks interviewed, and Warren Buffett said, he said it was during the course of an interview, but he said the best thing that you can do for yourself is take a spackling, is what he said, of some of the very best companies that the U.S. has to offer. Apple, Home Depot, Costco, right? Cisco, Intel, Okay, Procter & Gamble, Kraft Heinz Food, Johnson & Johnson, Wells Fargo, Cummins, John Deere. You can go down the list of all these quality companies. Every single one of them will make a great passive long-term investments, and you can justify doing that because when you put the retirement account together with the Roth account, those two will work in context with each other, and that's exactly what I do. Okay, I do not have a 401k. I have a TSP. You guys know I'm with the military, but the TSP provides that exact same thing. And I never look at it. Honestly, I contribute 10% of my pay to it. It goes in there. I dollar cost whether or not the market's down or whether or not the market is up. And I'm glad to do that. That's fine. That's ensuring that I'm making sure that I'm interjecting into the stock market every month. And that's what justifies me being a little bit more aggressive with my my individual account. Okay, so I hope that answers your question. I would try to stay away from, there's no real benefit from doubling up on the S&P 500. Okay, if you're thinking about contributing to another S&P 500 fund, you might as well just take that and roll it into the one, right? Because those S&P 500 funds are built to have 50,000, 100,000, 500,000, 2.5 million. It doesn't matter in that one fund. Okay, so don't spread yourself thin. I see this all the time where investors try to water down their portfolio and they do it unknowingly, right? Intentions are good, but you end up watering down. Okay, pick a few single stocks, pick the one account that you've got, the one avenue that you've got with your retirement account and matching, and just fund them the best you can, and don't worry about it. All right, thank you, Greenhorn, for that question. That was awesome. Of course, it is self-directed. Hey, that's awesome to hear my community actually talk like that, because when I started this channel, it's amazing how many people that I spoke with who had no idea that the self-directed account was even available. So I've got True Financials backing me up on the mistakes. I don't know. I'd like to know how old the True Financial. I've got an idea of how old some of these guys are, some of these channel creators. But he looks like a young guy, man, and very, very sharp for what I'm assuming is a young guy. And I don't mean to assume that, but that's actually a compliment too. But it's really, really cool to see if you are, in fact, a young channel creator, man, to kind of, I mean, you guys are kind of ambassadors on what is possible with the younger generation. Okay. And I can speak in that manner because I'm 40 years old. Okay. I'm not 20 anymore. But when I was hungry, but we weren't provided the options that you guys are provided now. And you guys, man, if you get any type of message from my channel at all, man, I'm all about you guys taking advantage of them and empowering yourself, because those options are out there. All right. I've got Sarah on the line. It's so good to have you on here. We talk all the time in the Facebook group. I've been kind of down on my dialogue, and I apologize for that. I've been extremely busy, so this has kind of taken a back seat, but I apologize for that. But she actually hit me up here. I always thought I did not have enough money to open a Roth IRA, and no one explained to me that you can just throw in 50 at a time. Gosh, those little lessons right there are golden, you know? And gosh, if there was a magic wand that I could wave on the Independent Investor channel and push out all of those lessons, perhaps maybe if I was a little bit more articulate, maybe that's why it's taken me 160 videos to get my message out, you know, but in a 5 to 6 minute video, you know, maybe 10 minutes or 15 minutes tops, it's so difficult for me to try to reach everybody, you know. There might be one little thing that I say that resonates with you, but that is one of the truisms in self-directed investing, is that, you know, I always encourage people, and I've said it in a lot of my videos in my past, one of the best things you can do for yourself that costs you no money is start the account, right? Because life is funny, because we go through little injection points, you know, where you'll get a little tax return, or you'll get a little bit of funding somewhere. You'll get a refund on whatever, just an unexpected refund. And a lot of people, they get those and they're so happy they go out and they blow it, right? But if you have that account open, you're providing yourself an avenue to pay yourself first, okay? I'm going to use my Tony Robbins analogy, where he talks about the importance of paying yourself first. And if it's $50 at a time, I started with $25. I started with $25. And I say this all the time. To start my Roth IRA account, I remember to the day I started, each for me and my spouse, $1,500 each. I sold one of my first cars for $3,000. I took the money, I split it, and I started our Roths because that's exactly what meant the most to me at the time. And I am so glad I did it. I am so glad, because we're talking about an account now that's worth 100 times that. So it just takes that little bit of initiative. And so many people have so difficult of a time just getting over that mental first step. It is the first step. And so many people come to me and they're excited about investing, and they some of them do, and some of them don't. And they never take that first step to just take my advice and start that account. Pick up the phone. I can't tell you how many people hit me up and they say, Ryan, it'd be so good for you to do a video on how to start a self-directed account. And I sit back sometimes and I wonder, I know I've addressed this on my videos before, but guys, if it means something to you, pick up the phone. It'll take you 10 minutes, okay? It may take a couple days to get the forms to them that they may need to verify, but that's all it is, okay? Sending them the information takes a matter of minutes, and you can actually have it started in a couple days and up and running. And now it does take a little bit of time to link the accounts together and make sure that they talk to each other to where you can fund from one account to another. And then, of course, to download the app on your smartphone, I mean, for visibility, but that's all luxury stuff, guys. But thank you so much, Sarah. I hope we provide a lot more of those answers to you. If there's anything that you guys can think of that you were dying to ask about the stock market, certainly want to hit me up. This is your opportunity to hit me up, and I'll give you the best answer that I can. But thank you, Sarah, for the question. Very cool. McDonald's is going to be there forever like Disney. Yeah, I know. I'm a proud customer. I've got 2 kids. So whenever we hit the road, that's the first thing that they see is McDonald's. I'm a big fan of McDonald's, actually. I actually don't eat the food anymore. I don't. I'm not into the unhealthy. Now they've taken some steps to actually improve their menu, and I'm happy about that. It's just the older I get, the less I care about eating stuff like that. And I don't eat at restaurants very often. I mean, I'm buying the stock to buy the stock for their business, you know, for the business potential. But I do agree. Kulik21 says they're going to be around forever. I agree. So I got a new sub. That's awesome. Hey, welcome to the channel. Certainly, I want you to engage and take advantage of the message. I run my channel a little bit unique of others. There's a few guys that operate their channel kind of like mine, but not very many. My intention on this channel and doing YouTube, if I'm going to become successful on YouTube, I'm going to do it the right way, okay? And I'm going to continue to do it my way. I maintain creative control on my channel. I do not do daily uploads, and I will not ever do daily uploads. I do think my videos through. I do not edit my videos either, and I do not charge anything for the information. I do advertise on my channel, but that's to provide a little bit of compensation for the investment that I do have in the channel for some of the equipment. If you guys want to understand a little bit more about starting a YouTube channel, there's a whole lot behind the scenes that you may not realize, and getting an LLC started is the big part of that, okay? And that was a $550 charge right there just to get that registered with the state of New York. But the channel's not going anywhere either, so I appreciate the subscription. That's awesome. Use the information to your benefit. If there's something that you don't understand, please don't tune it out. I talk about things like self-directed accounts. You need to understand the prospects of how that can save you hundreds of thousands of dollars over the long term, okay? And I don't throw these terms out there lightly, but I'm right, okay? You're not going to find that self-directed programs of any nature are going to come through the mainstream media. There is no way that anybody is ever going to talk about this and endorse it through the large financial institutions. Now, most of them do offer the product, but if you actually call them and you try to open a self-directed account, correct me if I'm wrong, but what I'm hearing a lot from my subscriber base is that there's a lot of attempts to upsell going on and talk them out of that avenue to try to get them under the envelope, right? Into a managed situation, guys. So you got to stick to your guns and validate it for yourself as to why you're requesting a self-directed account as opposed to a managed account, okay? Welcome to the channel. It's really cool to have you guys. This is the best way to reach the masses. I hope you enjoy, and I hope you exploit and take and empower yourself in the message. Thank you and welcome. I'm only allowed to contribute $5,500 to a Roth. That is correct. $5,500. I've got X charged. I'm focused in on that question. And the reason why I talk from 0 to 5,500 per year is a lot of people are in that camp, guys. I used to be in that camp. So it's hard for me to sit there and make the majority of my message for somebody that has, you know, between 10,000 and 50,000 to invest, or 50 and 100,000, or 100 to 250. It doesn't make any sense, because that's not really the root of who I'm looking to tailor my message to. All right. My message is tailored for the people who are looking to get involved in the stock market, don't have a lot of experience in the stock market, looking to get them into the stock market as early as possible in their life, okay? Whether that be 20, 30, 40, 50, or 60, it doesn't matter. I've had a lot of guys hit me up and they're almost apologetic. I'm 40 years old. I'm too old to invest. No, you're not. You're never, ever too old to start investing in the stock market correctly. All right. And a lot of people will go through their entire life and they will invest in the stock market and do so incorrectly. They will give away the farm for their entire life because they're friends with their financial planner and they take them golfing once a year. Okay. That just does not make muster for me on this channel. I'm sorry. I will continue to advocate for the individual investors' dollars and hard-earned retirement dollars that are going to be put away and be able to accumulate, right, unrestricted going forward. And that's what we're advocating for. But yes, 5,500 is the limit. I've got True Financials here. He's hitting me up. Do you think the political play around Amazon can cause it to slow down a bit? Absolutely. I do. I think it's going on right now. It's really unfortunate. Amazon is the one stock that I kind of broke the rule a little bit and bought it for the sheer purpose that I had to own it. I had to. It was a stock that I wanted to own long term. And I do own it long. I'm not trading Amazon. I've been in and out of Amazon a half a dozen times. I made a lot of money with it last year. I did do a video where I traded Amazon before earnings and I traded out of it 26 minutes later. I made a little over $1,200 in 26 minutes with Amazon. So I am up. I'm sitting on a little bit of pay dirt. We call that playing with house money. Okay. But I've actually taken a long position in Amazon and I'm doing so with a smaller position of 5 shares. And for you guys to understand, I mean, Jesus, at, you know, what's Amazon trading at right now? High 1600s, high 1500s. Is that right? 1580, something like that. 5 shares is still a $7,000 position. So talk about it becoming a monopoly. Yeah, you know, I worry about that with Google. I own Google, I own Facebook, but you know, to the contrary, what is the alternative? The alternative is to not invest in these companies, and that's really not something that I'm prepared to do. I tend to try to mirror these holdings with a safe holding on the other side of the house. So, for example, where I own an Amazon, I will own an Apple. Okay. And where I own, you know, for example, an Alibaba, I also own Microsoft. Okay. Where I own Google, I also own Intel. Okay. So those are some of the I've got some of the high growth names and then some of the high value names. And hopefully those, I'm trying to get those to balance each other out in the portfolio. But I totally agree with you. I bought Amazon earlier on this year and Donald Trump came out with a tweet. It cost me $600 on Amazon because basically said that the administration was going after him. I actually got stopped out of the position. That's the only time really in the last few years that I've sold for a loss. I actually sold the stock because I was cratering. So I did exit the position, but I actually went back into the position at a lower price point. So killer question. Thank you very much. I appreciate that. What do you think about Campbell Soup? I think it's great. Great company, legacy company. I think you could buy it as a cornerstone in the portfolio. It's not a stock that I cover. Would like to know what it's trading at right now at a PE. Campbell Soup, correct me if I'm wrong, is part of the staples. Is that correct, guys? And if it is part of the staples, you guys have already heard my rant on how out of favor and beat up staples are becoming right now. But I think Campbell Soup is a fantastic company for the long term. You can take that, put in your portfolio for retirement account, draw on those earnings that you've made the rest of your life and turn it over to your kids as a legacy or whatever you choose to do with it. That's a stock that'll pay you back over the long term, but it's not a stock that I'm intimately familiar with. Okay. I'm a big proponent to some of those old school legacy companies. General Mills, I put in that category. Kellogg, I put in that category. Clorox, I put in that category. You know, some of those old school companies, man, they can get it done. And I always say there's 1,000 different ways to win in the stock market, James, right? So, you know, if it's a company that you're interested in, certainly take a position in the company, take a small position in the company, 10 shares, right? Test the waters, get used to being a shareholder, get paid some dividends going forward, but make sure that you make that purchase within the self-directed account if you're in fact eligible to do so. So thank you for the question. Awesome. Go live. I've got Face Tank Entrepreneurs. Woot. Awesome. Go live. When you do the giveaway, I would love one. I'd like to know where your home base is, man. Honestly, you could probably barter a good deal. I bartered it down to $65 for the good one. I like it. I think it's cool. I'm going to pick up a bear the next opportunity that I do have when I go downtown, and they don't sell them as often as they do the bulls. But I'm going to try to pick up a bunch of them and kind of turn back some value. I'm not very good at that, turning back. I know, you know, my friend Ryan Scribnew, who runs a much bigger channel, he's doing giveaways all the time. And he does a big holiday giveaway and this and that. I'm just not big into it. I honestly feel like just providing the information, man, is something that I would have wanted to understand. And the inherent value in that is I understand it. And I think a lot of people, you know, subscribers, and especially a lot of the masses on YouTube, you know, they're tuning into YouTube to be entertained. They're not necessarily tuning in, you know, to get sound financial advice, you know, and it's certainly not something that you'd want to let your friends in on, you know, in your friend circles, you know, hey, I heard some investing, you know, information from a guy on YouTube and I'm thinking about doing it, you know, they think you're crazy, but it's okay. I mean, the information's legit, no doubt about it. So check it out for yourself, and make up another story that you didn't find it on YouTube, you know, make something up that's really interesting. Tell them you happened upon it. I don't care. You know, you don't have to mention me at all. So I've got Invincible Summer. I'm going to focus on that question. And I don't script these questions, so they come in here rapid fire. So I'm just kind of answering these questions off the cuff. I've got, hello, Ryan. What's your thought on Johnson & Johnson? Continued trending downwards over the last several months. Man alive, I've watched Johnson & Johnson go into the high 60s, okay? So a downturn over the last several months. I would like to look at a 52-week high on J&J. Did it make it to the mid 140s? It's settling in at the mid 120s right now. I look at it as a buying opportunity, honestly. Please understand, I've owned Johnson & Johnson now for years. And I've actually owned it. I remember a much steeper downturn in Johnson & Johnson. Hell, I remember owning it and questioning why I owned it. But the entire time I owned it, I was paid dividends. I invested in it when I could, and it paid me back. It ended up going up into the 140s. And what I ended up doing is taking some profit off the table. So I actually have a lower position in Johnson & Johnson right now. I believe I'm right at 26 shares, with some partial shares that have been paid via dividends. I think I've only got about $3,800 in Johnson & Johnson right now, I believe. But I did actually take some off the table. I actually seriously thought about putting some more money to work in J&J. It's not one of those stocks that I'm interested in selling ever, ever. I'm proud to own J&J, but just be kind of careful. And your question actually is really, really a good one. And I'd like everybody to kind of understand my thought process on that comment. And it's a good one. And trust me, I go through these validations all the time. Like, what am I doing? You know, I invested in this good quality company and it's gone down over the last couple months. I want you to have fair expectations about stock and the stock market. Okay. A lot of people have unfair expectations about investing in a stock and seeing it go down. And then you go through this period of, you know, self-doubt, or what if I would have not invested in this stock and invested in this stock? What am I doing? The deal that Johnson & Johnson gives you is the opportunity that when it does adjust back, let's say you invested in it in the mid 140s. Right now, I would look to take another small position and average down in the stock, okay? Now, you can always exercise your right to just hold the stock, okay? And I want you to separate, all right? I want you to separate between what your mind is telling you about how crazy it is to watch your money go down, okay? Because if you guys have never heard the phrase in the stock market, you cannot lose money unless you sell a stock in the negative. I want you to resonate with that message because it is so true, all right? And if you don't need the money, which you shouldn't have if you invested capital into the stock market to take the form of investment capital in the stock market, you can always buy more of the stock, or you can exercise your right to hold the stock. In my opinion, both of those options with a phenomenal company like Johnson & Johnson are prudent options, okay? What I don't want you to do is talk yourself out of a fine company like Johnson & Johnson by using the rationale that you gave me, that it's been on a downtrend for the last couple months. Yeah, it's adjusted back off its 52-week high, but I really wouldn't say that it's channeling down into a downturn, okay? Now, I own Johnson & Johnson. I also own Merck, which has been on a tear. And I also own Pfizer, which has also been on a nice run. It trades in a really tight range between 30 and 40, okay? But Pfizer and Merck both pay a monster dividend, okay? Johnson & Johnson pays a pretty healthy dividend as well, okay? And remember that the majority of the wealth that's ever been paid out in the stock market has come in the form of dividends, mainly of these great companies. 75% of the S&P 500 pays out a dividend, and you guys have to realize that that's where the majority of the wealth is made, is in dividends, not capital appreciation, all right? So Johnson & Johnson is doing exactly what it's supposed to do, all right? Don't judge a stock on a couple months, all right? Be fair about it and judge it after a few years of being a stockholder in J&J, because I actually remember a couple years back when the stock actually moved all the way down into the high 60s, okay? So where it is right now, relatively speaking, it's performed quite good, all right? Awesome question. What do you, I'm going to go ahead and scan down a little bit here, guys, to give me a chance here. What do you think about Starbucks? Starbucks is awesome. I like Dunkin' Donuts as well. I actually like both restaurants, to be honest with you. Starbucks, I don't think Panera Bread is a publicly traded company anymore. I think they moved private, which is kind of odd. But Starbucks and Panera Bread at the time when they were public had actually two of the best loyal customer programs, subscription programs that they've got, to where you can actually order online and actually go in and pick up your drink without having to wait in line. Starbucks is working through the efficiencies of that particular delivery. And I actually think coming off the last couple quarters, the last quarter, I didn't actually look at it. The quarter before it was actually pretty poor. And the warning that I've given on Starbucks, the same warning that I'll give this week that I gave last week on Starbucks, you can buy it if you want to. 10 shares is going to be around $570, okay? I wouldn't recommend putting a whole lot of your portfolio allocation in Starbucks. If you want to invest in the company, certainly you're going to make money with Starbucks. Okay, that's fine. But I want you to understand that Starbucks is not the growth company that it was 10 years ago. Okay. And where a growth company starts to transition to a value company, that can really send shockwaves through the stock. And you don't want to be a big shareholder in those stocks when they're making that transition, because that price to earnings ratio will come kind of out of the stratosphere. And I think Starbucks trades at a fairly rich multiple right now. And when that starts to adjust down, the stock price will suffer and it will go down with it. All right. I do not own Starbucks right now. There's just so many other companies out there that I would rather own than Starbucks. But I do endorse the stock if you wanted to take a small position in your self-directed Roth in Starbucks. No doubt about it. Take a 5 or a 10 share position, depending on what type of capital you're working with. I've got Julio Armas on the line. So that's my position on Starbucks. All right. In what situation is it reasonable to buy a long put option on a long position that you're holding? I don't trade options. Merrill Edge, for some reason, does not give me the option to trade call options, which I would be more interested in, because I'm more of a bull in my thinking. I'm not very good at contrarian and picking stocks that actually go down. Remember, put options are more of a hedge or an insurance against an anticipated downturn in a stock. Okay. But that's really all I kind of want to say about options, because it's really not my cup of tea. I have researched options, and man, I don't understand it very much. The percentage of returns that you can get are on such a smaller amount of money, right? I really enjoy investing in stock. I will probably study the topic when I get a little bit more capital, but I can't do call options, which is what I'm more interested in, and I'm not a big insurance guy. And put options seem to me to be kind of a hedge against a downturn in the stock market, which could be a prudent move right here, right? One put option contract will be worth 100 shares of a particular stock, and it may be prudent for me to put some of those put options on, like, let's say a position like AT&T. I've got 100 shares. Buy one put option at, let's say, 32.50. If the stock goes down, I get put into the stock at a lower stock price, or even maybe put some insurance on it to run it even lower, let's say $25, and buy the contract and just hold it long term and be paid on that contract. So I'm all about it. They're great. A lot of people make a lot of money with options. If you guys are into that, that's great. I give you my stamp of approval. I have traded options before, but it's not something that I really dabble in very often, because I just don't have that type of time or the type of interest in options as of now, because I don't know much about it. But thank you for the question. Sorry I couldn't do a better job of answering. Hi, Ryan Campbell. Soup dropped 12% today. Is it a buy the dip opportunity yet, or still wait? Catching a falling knife is dangerous. If it dropped 12%, I'd be kind of interested to look at the numbers as to why it did. If you've heard the phrase never try to catch a falling knife, usually patience is a very good virtue in the stock market. Never ever rush and think that you have to panic to buy a stock. You'll end up being hurt by that. I would say that if you want to invest in the company, being Campbell's Soup, buy the position. You may be getting a good entry point. Obviously, the people who owned it yesterday, would have wished they weren't in the stock, and it just puts you into position to buy the stock at a 12% discount. That's the only way I look at that. But as far as like buying the dip, those are terminologies that I understand what you're saying, and I've done it before. I really have. I tried to buy the dip in Under Armour last year, and I got punished. So just be kind of careful with looking to buy the dip. Those folks like myself who are still holding on to my General Electric shares can tell you about, buying the dip and trying to catch a falling knife there, which was close to impossible, honestly. So I'm still making up losses in General Electric. But if you're interested in the company, go ahead and take a stab at it. But if it did take that big of a drop, take a small position to start. And then if it does continue its downward trend, go ahead and average your money in there and accumulate your share base as it goes down. Eventually, the stock will turn around and go back up. All right. It's an awesome question. Thank you. I need you to know, I had somebody asking for help. I need y'all to help me get my new challenge trending. It's the Good Credit Challenge, please. You have become an adult when you realize that 1,000 has the ability to turn into 1 million if you invest it wisely. Good Credit Challenge. Awesome. Thank you for that, Uncle Marv. That is a good realization. Not necessarily a realistic financial goal. I think if you did invest 1,000, depending on how young you were, and you had a financial goal of becoming financially secure in your future, I think you definitely have the chance to get up to 7 figures in your life. Certainly not the premise of my focus, but certainly thanks for the post. You have a lot of discipline. Thank you. 28, that's what I thought. Time is on my side. There's no doubt about it. I'd kind of like to know, I don't know if you've kicked over to my channel very much. I've watched some of your videos. I actually just missed one of your live feeds that you had did. And I dropped on there real quick and you had just signed off because I missed it. But I am a subscriber to the channel. But I would be interested to know if you are involved in any way in a self-directed Roth, or if you do some of the more advanced applications, Acorns, Stash. A lot of the younger generation is involved in Robinhood. Certainly, I endorse them all. It's not one of those things that I endorse for a new investor to go into first. But I'd kind of like to know your method of investing, man. That's I'd really like to know where somebody like yourself is coming from, because I've been impressed with your videos. A very smart guy, no doubt about it. So if you guys are in the community here and you want to kick over, support another channel creator, I always give a shout out when they come onto the community. And True Financials is in the community right now. So kick over to the channel, help them out, subscribe. 28, that's kind of what I thought. I wish I was 28 again. Yeah, no doubt. Me too. No doubt. I'm up 300% in Shopify. Awesome. That's great. You took a position in that. Now the question is, what do you do with it? Bought it over 2 years ago. When you're up that much on a single stock, do you ring the register and reinvest the profits into something else, or keep it running? I have to be very careful with this piece of advice, because Shopify is very, very aggressive growth. And it really kind of depends on what some of your other holdings, if any, you have. I would like to know how, if you've held the stock in a brokerage account, let's say like Robinhood, for example, to make sure that you're free of any capital gains, or if it's invested in a Roth IRA, of course, you are tax protected on that 300%. Again, we try to keep as much money on your side. If it were me personally, and it were my money, not your money, I would sell the stock. I would sell the stock next week. You're a winner. You're a winner. 300%. You can put that money to work in a little bit more safe manner, and probably some blue chips. And depending on the amount that we're working with, I mean, if you're up $300 on $200 investment, certainly that'll give you the ability. But if you're up 300% on, $10,000 investment, now we're talking about some really good pay dirt. That $3,000 you sell out of the stock, $13,000 to kind of diversify across a broader spectrum of single stock, if that's what you wanted to do. So it's relative to how much money you're sitting on. Certainly, you always have the option to sell some of the stock, maybe sell out of half of the position. If you like the company, keep half a position and put the other half of the position with some of those winnings to work. Because you're up big. I mean, you're a winner. And I love to hear stories like that, man. I tell you, if you want to try to make money, and go to Las Vegas and try to gamble, good luck. But I hear success stories all the time like that on my channel. And you can make money in an infinite number of ways in the stock market. And I love to hear stories like that, man. I love to hear about winning trades. But I'd like to know if it was more of a trade or an investment for you. But that's a killer return, man, and they are possible in the stock market. So very cool. It was great catching you live. Very cool. Thank you so much. That was awesome. True Financials, man. One of the channel creators that come on, man. Be well. Thank you so much for your time. if you guys kick over to True Financials, man, definitely want to subscribe to that channel. Very sharp and very young guy too, man. Thanks for coming on. I appreciate it, man. Yeah, so Sean is asking me to do a video, and I've actually got this on my list. Can you make a video of cities where you think young people should consider moving to for better opportunities? I live in Southern California. Well, you're in a very good hotbed for opportunity. Would like to stay in the western part of the USA. Yeah, you and me both, brother. I'm here in New York City. I can't wait to get home. I'm from Oregon originally. But I've worked out of the Port of LA, spent a lot of time in Los Angeles. What are you complaining about so much, man? Jeez Louise. Everybody I ever talked to from Southern California never wants to move. But I'll give you a quick premise. Some of the cities that I've been to, Seattle, Washington, very good for young. They're going to be cities, guys. I don't know if I was a young person that I wouldn't want to sow my oats in a big city. And I've been to most of the major cities in the United States. I'll start with Anchorage, Alaska, Seattle, Washington, Portland, Oregon, Los Angeles, San Francisco, and San Diego. I mean, you're right there on all the West Coast. I've been to every one of them. And it really just kind of depends. It's an open-ended question, so it kind of depends on what you're interested in. Now, I live in New York City, and I can tell you what, New York City bleeds of opportunity. Bleeds opportunity. I tell you what, and it's not only happening in Manhattan, but it's also happening in Brooklyn. So it kind of depends on what your interest is. I mean, somebody told me that if Brooklyn was its own city, it would be the third largest city in the U.S., and it's a borough of New York. There's 10 million people that live here, guys. So it really just kind of depends if you're looking to get involved in the financial world, get involved in financial planning. I mean, it's something that I'm really down on. But as far as making money, a lot of the financial planners I talk about, they all own self-directed accounts anyway. And they sell managed accounts to their would-be customers that are coming in, right? But there's a lot on the investment banking side. I mean, all the heart of all the major companies are right downtown Manhattan. I love it down there, guys. It's just bleeds of energy. The only other city that I've ever been to that bleeds that type of energy is Los Angeles, and it doesn't hold a candle to New York City. No way. I mean, you'll understand it if you ever come here. But I will do that on a video. I've looked at different criteria on the affordable cities. I think Detroit has phenomenal opportunity, and you're not going to pay an arm and a leg for real estate. I mean, if you had $3.5 million to drop into an apartment here in New York City, certainly we'll welcome you with open arms. But I'm not going to blow $3.5 million on an apartment to live downtown, in Manhattan. I'm just not going to do it. And even to live in Jersey, I mean, you're talking about $10,000 a year just in taxes to live in Jersey. So it's pretty crazy. So it is relative. If you're talking to move somewhere like Pittsburgh, where there's opportunity there, there's opportunity in Dallas, Texas, opportunity in Houston, Texas. Guys, I've been to every one of these states. So I do like Florida. I haven't been to the Carolinas very much, but that's kind of, gosh, I just covered the entire United States. But I will make a video because it's different criteria. I did see some data that I posted in the Facebook group with regard to affordability on single family houses, depending on what your salary is. That was quite interesting. So Michigan was one of the tops on the list. West Virginia was on the list, and North Carolina, very beautiful state, was also on the list. But I think it's some of those mid-tier cities that are a little bit smaller in nature where a lot of the opportunity may be. Nashville, Tennessee, that comes to mind. Austin, Texas, that's another smaller one. I've been to San Antonio as well. So it just kind of depends on what your interest is, man. But I find it interesting that you want to leave Southern California. I've talked to so many cats that don't ever want to leave there. It's kind of funny. Any thoughts on REITs? I've got Brody, man. Brody's been with me for a long time, one of my legacy subscribers. So I give a shout out to my loyal subscriber, man. No doubt about it. It's amazing how I can remember a lot of these folks. But I remember Brody from a long time ago. I own 2 REITs right now. I own Simon Property Group, which is one of my favorites. And I also own American Tower REIT. Now, I'm not going to speak like I'm an expert on REITs because I am not. But Absolutely. Real estate exposure. When you guys see my portfolio breakdown, you see on the report there that real estate is actually a category of sector. Okay. It's not one of those sectors that I talk about very often. But to get some real estate exposure, I actually think in those two holdings, I've got about 6% in REITs. So, yeah, I'm all about it. Again, you're going to see a little bit better dividend. I think AMT, American Tower REIT, does not pay that healthy of a dividend. I think it's around 2.2%, maybe 2.25%. Simon Property Group pays a very healthy dividend, closer to 6%. So I get hit up all the time about not having any bond exposure. And I would rather own the stock of a REIT that pays a nice 6.5% dividend, and give me some chances of capital appreciation on top of it. So, yes, I endorse that move. I absolutely endorse having some real estate exposure. Again, as long as you own it in your Roth IRA. So hopefully that answers your question, Brody. Thank you, man. And again, I'm holders of two of them. I got Brent on the line. I got to thank Brent, man. He comes on every single week, and I want to thank you for your support, man. No doubt about it, from the bottom of my heart. Fellow Oregonian, I believe. But he's hit me up with a question. I think he's come into the commentary here just at the end of this. I'm going to probably go for 20 more minutes if I can. I usually go until I lose my voice. I bought Amazon $450 back in 2015. Sold it in 2017. Laugh out loud, in the 900s. It was amazing. Yeah, I tell you what, Amazon, if you look at the historical rate of return on Amazon, it's scary. It's 35,000%. 35,000%. Had you invested in Amazon back when it came out, guys? I'm not going to do the math in my head, but I would be amazed at what $100 invested in Amazon would be worth today if you just bought it, hold it, and forget it. Honestly, it's crazy. I wish I had stayed in, but I felt it had peaked. But happy I took profits. Yeah, you can't beat yourself up over taking profits in a stock. No doubt about it. And I never ever, because you probably took those profits and put them to good work in other areas, and it's really hard to track that. I know I've done it. I take profits in stock all the time. I do it not only to hedge a position, perhaps, but to free up free cash flow, and also to put money to work in another asset. I do it all the time. I probably do it too much. I don't really care. That's just my style. But I've also built up a pretty healthy portfolio over the years. So I'm not going to beat myself up over. That's just my style. I've got Doug investing into weed, Aurora. Aurora is one of those hot stocks. I saw a very good special this week on Canopy. Canopy might be one of the first. Now, I know GW Pharma's on the New York Stock Exchange. It's run up huge since I recommended it. But I saw a really good interview this week, and you guys can look at the interview. The CEO was a guest on Mad Money. You guys know I tune into Mad Money. I enjoy Jim Cramer. I've enjoyed Jim Cramer before Mad Money, okay? I used to search out Jim Cramer articles actually online before he actually came out with his own show. I do enjoy his message, and you can make a lot of money actually if you kind of listen to some of the stock messages. But Canopy, it's a three-name. I'm escaping the name of the company, but Canopy is the name of that company, and I forget the ticker symbol. I apologize, but that actually looked very, very attractive as well. So thank you. Aurora is one of those stocks that actually have come up on the radar, and I've got a couple others there. Greenhorn's hitting up with a couple offerings as well. Avon is at $1.91. It's ridiculous. I wonder if it'll ever go back to 22. I don't know, man. Good luck with that. I hope you make money. I'm all about it. I hope you do. So I've got Lee. Hello, all. Thanks for your time. No doubt about it. I'm glad to do it. Glad to do it on a Friday. I actually look forward to this. I sometimes wonder if I'm going to jump on here and there's not going to be anybody, and I'll just come on for 5 minutes and tune it off. But it's amazing, really, the support. And from the bottom of my heart, I want to thank everybody that supports the initiative and creating a movement of a community of investors that are that much more educated on the prospects of investing on your own. Okay, make no mistake about it. That's exactly what we're looking to do. X-Charged, J&J is relaunching their baby care products with more natural ingredients to appeal to millennial moms. And that's awesome. I did not know that. Johnson & Johnson has been around for 100 years. They're going to get it right. And I know there was some concern quite some time ago with regard to their talcum powder, I believe. Maybe they have some pretty big lawsuits, actually. But J&J is a company that I have never been hurt with. If it goes into a downturn, certainly you just wait the stock out. Exercise your right to hold, or exercise your right to invest more in a good quality company like that, man. Over time, a company like J&J will do nothing but pay you back, okay? What do you think of Boeing? Geez Louise, it was on a tear today, wasn't it? Wish I would have bought it at 3 1/4. That's what I wish. I'd like to know if you have any other industrial exposure, but I think if you're looking to add Boeing to your portfolio, I think you'd be okay to do that. Just be aware that the stock has doubled over the last year, okay? Now, if you had been investing in Boeing at 130 and it was here, up, I mean, I remember Boeing when it was a 130, okay? And it has doubled over the last year. So if you actually asked me the question, do you think I should take profits in Boeing? I would actually endorse that more than buying Boeing right here. But a 10-share position is going to run you $3,500. Gosh, half of that, you're talking about $1,750 for 5 shares of the stock at 350. It's a little rich for my blood. I think in the industrial sector, I think there's just as many names out there that are just as appealing. I've offered 2 of the ones I own. 3M is one of them, and UTX, United Technologies. I'm a big fan of Honeywell. Honeywell is a fantastic company. Industrials and defense, I kind of put in the same realm. Defense, I look at more of a subsector of the industrial sector, but certainly, if you don't have 10% exposure to your portfolio, you got to look to get some exposure somewhere. I'm a big fan of Caterpillar, and I'm a big fan of John Deere, but I've watched these stocks go into the stratosphere, and I don't want to see you hurt, okay? I think Boeing is going to be okay long term, but you need to be willing to take it into a big, deep downturn if something crazy happens to the stock, and it ends up going on a multi-year downturn. Do I think that's going to happen? No, I don't. I think Boeing's the best aerospace play you can play. And if you had an extra $3,500 to put a 10-share position on, I go ahead and endorse that. But it kind of depends on how much money you're working with and how much relative to your overall portfolio you're willing to expose to a name like Boeing that, again, has doubled over the last year, okay? So just some thoughts there, okay? I'd be careful. I don't own Boeing, okay? I've got V Melissa 06 video of comparison of online stockbrokers. I'm trying to get started in stock investing, but don't know which investment company to choose. I am so glad you asked this question. This is really, it's a fantastic question, and it's such a genuine question because it comes from a heartfelt position. A lot of new investors feel the exact same way as you. And I tell you what, it took me skipping from my first broker, which was Thrivent Financial. I went with Citigroup Smith Barney at the time. I ended up with Edward Jones, and now I'm with Merrill Edge. And I can tell you, I'm very happy with Merrill Edge. There is a few that I recommend in my top 5, okay? And it's not because of direct experience. My direct experience tells you to look at Merrill Edge as one of the lowest cost brokers out there. It also kind of depends on who you do your main banking with as well, because it would certainly be nice if you could kind of lump all your, that's the one thing where it's kind of nice to put all your eggs in the same basket, to where if you had your checking and savings account, maybe your brokerage account and your retirement account, all with the same financial institution, it would help you, because when you pull up, your accounts online, it's really easy to see everything on the same page. And that's how I have it with Bank of America, okay? Merrill Edge is a subsidiary of Bank of America. But I will tell you this. There's a lot of people in my community who use a lot of different brokers. What I'm going to do is I'm going to summarize for you the top 5, okay? Number 1 is probably Fidelity. All right, Fidelity is mentioned more often than not. And there's a lot of people doing a lot of research in my community. And so I don't make that recommendation or that offering from my perspective lightly, okay? Fidelity is probably number 1. TD Ameritrade is probably number 2, okay? Number 3 is Charles Schwab. Number 4 is Vanguard. And number 5 is Merrill Edge, okay? Now, there are many, many others that offer self-directed investing. I know Brent is still on here, I know Brent works with M1 Finance, and I don't know much about it. I know you can kick over to his channel and get some information on M1. I don't invest in it. I know he invests in both Merrill Edge like I do and M1 Finance. There's some cool, appealing benefits to any of the brokers that I gave you, okay? But when it comes right down to it, okay, and I'm so glad you asked this question because it is such a good one for new investors to understand. Don't overestimate the aesthetics of what a broker will give you, okay? Most of them will offer some sort of incentive to bring your money from one institution to another, okay? And that may help with some cancellation fees, and it may help to incentivize you bringing your business in-house with their brokerage house, okay? Most of them are going to have incentive levels, okay? So you need to understand what those incentive levels are. For example, once you reach $50,000 or a collective amount within that financial brokerage house, collective assets, they will give you, let's say, free trades, okay? And then you need to understand what those thresholds are, okay? So TD Ameritrade, they may offer, free ETFs to buy. They may offer free stock trades. But those top 5 right there they come up more often in my community discussion with subscribers to my channel. And those would be the 5 that I would look at. Now, if you Google top investors to invest in, you're going to find the same information that I'm offering. I know some of them go with Ally. I've had a few other, military investors tend to go with USAA. I do not. And I'll leave it at that. I'm not satisfied with USAA brokerage services. That's why I go with Merrill Edge. But hopefully that kind of helps you get a start. I think a comparison online, I've actually done that. I've got 160 videos online, and I'm a very small channel, very, very small. So I've got a very loyal following of folks that follow and resonate with the message. It really allows me to be more personal with my subscribers on my channel. And I rely on referral a lot. I rely on the videos being shared with people in their community. So I have done this video before, but I will absolutely revive that topic. But hopefully me offering those 5, Melissa, that's a collection of a lot of different opinions from a lot of different subscribers looking at a lot of different information on what incentives each of these brokers provide. And they're making the decisions based on that research that they're doing. So hopefully that helps you get you a start, but you're not going to go wrong with any of those 5 brokerage houses. So I would start and I would end with those 5, okay? Don't spread yourself too thin. Don't waste a lot of time. The most important thing to do for yourself is start the self-directed account, all right? And my broker in particular was one of the very first brokers to offer the self-directed account and the self-directed program. And they do a lot to support their self-directed investors out there. They do a lot. They're very good. They call me once every 6 months. They have excellent customer service, and they're very good. They're very good. So in my particular opinion, I can tell you a lot more about them. But those would be the top 5 I'd start. Thank you so much for your question. It was very good. I've got Brody down below you. You may have already done this and I missed it, but if not, can you make a video of your process of evaluating stocks if maybe they aren't a well-known company? Yes, I can do that. I think my analysis might surprise you. I've been extremely successful in the stock market as a value investor, Brody. So I would come back with that question, and this is one of those questions that everybody wants to know. How do you evaluate finding a stock that's going to make me a lot of money? Right? That's what a lot of new investors, man, they want to know. How can I find that perfect stock, and how can I evaluate a balance sheet that's absolutely perfect, that's going to make me over average return going forward? Right? It's a fair want in the stock market, right? I want to invest in that stock that's going to make me an over average rate of return, okay? The problem I found with analyzing stock is that you can find that perfect stock, accelerating revenue, perfect balance sheet, no debt. You buy the stock and it goes down. Seriously. And it really kind of comes down to being a value investor. The reason why I invested in Alibaba this week, I didn't look at the balance sheet. I didn't. It's got a $500 billion market cap. Its price to earnings ratio is relatively low. It's at 50. And for a growth company like Alibaba, I wanted exposure to the company, so I took a small share position in it. Why do I invest in a company like AT&T? Why do I invest in a company like Verizon or Johnson & Johnson or Procter & Gamble or Home Depot or a Costco? Guys, these are all proven companies, okay? So if you're going to discredit investing in some of those value names for the expense of beating yourself up all the time, scouring over balance sheets, looking at technical analysis. I find guys on TV all the time, they do the technical analysis and they say, because a stock chart looks the way that it is, a stock is supposed to behave that way. They've got a 50-50 chance of being right or wrong, okay? And these guys are technical analysts. They do it all the time, and they are wrong all the time, okay? So you can't give that much credit to people who are just trying to find that perfect balance sheet. I know the Can Slim method of the IBD. I followed that for years, and I've tried to invest in those stocks, and I lose money, okay? It is so easy to lose money in the stock market when you think that you can control it, and you think that you can outthink it. But make no mistake about it, if it's a publicly traded company, there's no stock out there that doesn't have 1,000 analysts looking at it, trying to determine whether or not it is a good investment or it's not an investment. And sometimes the best moves that you can make within your self-directed Roth IRA are the ones that are right in front of your face, the ones that are right in front of your face. I'm talking about Apple, Intel, Cisco, right? Some of these very, very good companies that are established, they've been around, and they've got a history of rewarding shareholders. And I want to put my coattail to every single one of those and try to, accelerate my growth with the growth of those companies. That's just how I invest, right, wrong, or indifferent. I know a lot of people will tune into the channel and be like, wow, this guy doesn't know anything about technical analysis, and he doesn't know anything about, I know how to read a balance sheet. That's fine. Do I resort to reading balance sheets all the time when I'm making my stock decisions? No, I don't. I don't need to, because I've been very successful just being a value investor, knowing that every dollar that's paid to me via dividend and every dollar that's paid to me via capital appreciation is protected 100% in my Roth IRA. And so many people don't get that fact. They end up investing in a Roth IRA thinking that they're going to get tax protection, and they will, only to subject their dollars to fees and affect the wealth preservation piece in the Roth. And that's where a lot of people trip and they fall on their face. Okay? It's a killer question. Thank you so much, guys. I'm going to try to finish up here and try to adjust. Man, Brody just gave me the biggest tip that I've ever got. I can't even believe that. $5? Man, if I could give it back to you, I would. That is so unnecessary, but so appreciated, and that just makes my night, man. Thank you so much, man. This has been a good day. I found out an excellent piece of advice today with my career. I'm moving up in the world. A lot of you guys know that my time here in New York City is limited. I'll be here for about a month and a half, a little less than a month and a half, and then we'll be moving on with the Independent Investor channel. I will be posting my goodbye New York City video for you guys Been a great first year on the Independent Investor channel. A lot of ups and downs. You know, I almost quit twice. I really have. It's very frustrating to start a YouTube channel, but I'm rooted in now, guys. I have a vested interest in this channel. I have a motivation to continue to provide that. And quite frankly, the motivation that I get is from you guys. That's it. That is it. If I didn't have people come on here, it would really dishearten me. And I would actually seriously consider shutting down the channel, because I do this because I honestly feel like there's a genuine need out there for this information. I really do. Brody, thank you so much, man. That was very cool. Thank you. I think the last tip that I got was $10 or $2, and I was stoked for that, man. But that's really cool, man. That's really cool. Thank you so much. I'm going to try to skim through. There's a ton of questions on here that I did not get to. I'm going to spend a little more time here. I'm going to make sure that I got to everybody. I've got Lee. Tried to find the fee they charge on my wife's former 401k, about 5 PG pages. Yeah, no kidding. I look all over for the breakdown, but can't find it. Is it because they hide it, or is it included on the gain or loss? Wow, that's a fantastic question. I've got Lee Nguyen asking the question. Very, very important question. If you guys log in to the account that you have, there's going to be a cost basis tab, and it's going to actually show you the real return of your investments. But honestly, it's going to be on your monthly statement. Okay. I've had people fire them over to me, and I can identify them really, really quick. But there is a lot of charges that are sometimes hidden. Now, the very, very good 401k offerers to employers are very, very upfront with the fees that they charge, and they're relatively low normally. Okay. It's worth paying a little bit of expense in that 401k, Lee, if your wife is getting a matching contribution. Okay. If it's with a major sponsor holder like Fidelity or Vanguard, I have scoured over those 401ks, and I really, really like them. I really endorse them. And those accounts, if they offer a matching, are usually really, really good. I would continue to keep that. Okay. I don't want to see you look to trade in a 401k for a self-directed Roth IRA account. What I'd like to see you do is do both. Okay. So continue to contribute to that. 5 pages is actually pretty short. With Edward Jones, they've got a 43-page disclosure of fees, and I've actually done videos on that. You want to talk about a way to get me all charged up, get me talking about fees with brokers. That gets me fired up more than anybody. But it should be in your monthly statement, and you're going to have some proactive effort to get online, okay, and scour through that. I would do it for you in a heartbeat, but you're going to have to either get a hold of that statement, and you're going to have to get online and get into that. If your wife has a human resources department with her work, they also should be able to assist with that. Or if there's a customer service department with that 401k offerer, they also will be able to answer those questions for you. And they're tough questions to ask, like, what are you charging me to have my money with you? A lot of people aren't willing to ask that question. They don't like to talk to guys like me because I'm vicious. All right. They do not want to talk to guys like me because I'll cut right to the teeth. Eventually, I'll end up leaving. Okay. And not doing business with them because I'm just the wiser. That's all. But you will have some level of expense in the 401k. But you will need to try to find that. You will need to try to find it on the monthly statement that's available, or the quarterly statement, or it will be available on the website. Okay. It will be in the form of an expense, or make sure that on that monthly contribution statement, they're not taking a percentage of those dollars as they go into the 401k out of your wife's money every single time that she's contributing to that account. Okay. So I'm going to need you to be a little more proactive on making sure you understand the ins and outs of that 401k. I know I'm sending you, they're not fun. They're very complex. They're built to be that way. Okay. But you need to know what you're invested in and what the fees are. All right. Hey, Ryan, was your answer on the above question with getting a Roth IRA starting at $50 a time? That is correct. I'm addressing Wesley's question here. You can invest as little or as much as you want, up to $5,500. Starting the account costs you nothing. Okay. Now, $50 is not going to buy you a whole lot of stock, and you have to understand that certain index funds do require a minimum amount in there. There are some Vanguard index funds that require, let's say, $2,500 to start. A lot of mutual funds have a minimum required to participate in that fund. Single stocks do not have such a thing. Okay, there's no expense to enter into a single stock minus the fee that it's going to take to get into the stock. And then a self-directed account that runs from $6 to $8, depending on what brokerage account you go to. Okay. But if you do $50 at a time, I would consider that you end up building that up over time. Start the self-directed account, start to fund it with $25, $50, $100, whatever. If you get a quick interjection of cash of, let's say, $250 or $500, drop that in there as a lump sum. Get yourself up to that first $1,000, then make your first stock buy. All right. You don't have to start dollar cost averaging right away, because your $50 isn't going to go very far. All right. But you absolutely can get that $50 into the sub account, which is usually a money market account, before you actually take those from the money market and deploy them into the stock market. All right. You can absolutely start it with $50. Okay. Costs nothing to start a Roth IRA. Anybody can do it. Roth or traditional, doesn't matter, whatever you want to do. So winner, chicken dinner. Yeah, exactly. $5. Absolutely. I'm stoked. Been to anywhere in Alabama? I have drove through Mobile. Yes. So that's a good question. I hear it's very nice. I've got a lot of colleagues down in Mobile. There's a big military presence down in Mobile. And I liked it when I drove through it en route from Texas to Florida. I thought it was nice. We were only in Alabama for a short stint on I-10. Ever been to Canada? Absolutely. I worked in Detroit. I used to do inspections in Canada, Sarnia. So we had Sarnia and Windsor. So yes to your question. That's an easy one. Have to go, champ. Absolutely. I'm going to sign off here pretty quick. Greenhorn, thank you so much for your contributions. Guys, thank you. I really appreciate it. Check out Axon Police. Yeah, these feeds, if you guys want to look into any of these, very, very cool. Should say police cam. Okay. I will look into that. That's awesome. Thank you for the offering. That's very cool. Been using TD for a long time, but very happy with them. Doug, thank you so much for that endorsement. I know it'll help Melissa. I know she was asking up above about some of those. Lavertus, fantastic, man. So good to see you. Awesome, man. One of my most loyal subscribers. Been around for a long time. I hope you're finding value in the message, man. No doubt about it. Thank you, Lavertus, man. Very cool. I hadn't seen you around for a while. I miss your comments. Very cool. Thank you so much, Melissa. You're very welcome. How do you find that perfect stock? Get to know Warren Buffett. No doubt about it. Absolutely. I love the show Becoming Warren Buffett. Very touching. It'd be a very interesting find if you can pick it up off of YouTube. I know it's an HBO offering, but pick it up if you can. If you can buy it off of Amazon, or I don't know, you guys stream things now. You guys' generation, get a hold of Becoming Warren Buffett. It is 1 hour well worth your time. You will learn more out of that 1 hour than you will learn from anybody else on how that man approaches the stock market. Also, Charlie Munger, who's his partner, also approaches the stock market. You will learn an immense amount in 1 hour's time just watching that show. Please click the button. Yeah, I guess that means a lot for me. I guess it supports the channel. So click the button, guys. I'm actually going to sign off here. I've been going for an hour and a half. This has been the most successful live feed that I've ever had. Thank you so much. Avi is on the line. Keep it up. You're genuine. Yes, I am genuine. I absolutely am. I wear my heart on my sleeve. I do this for you guys. I hope it helps. Honestly, it helps to hear a message from a guy that you can resonate with. Okay. I don't do this for any other reason than to help you guys, provide you an option that seemingly a lot of people don't understand is available to them. And that's all I'm trying to do, is provide a referral of what I do. I do this every day. This is what I do. This is how I invest in the stock market. And it can really provide a lot of good option for a lot of people out there who would just as soon keep control of their own business. That's really what it comes down to. As little as I can share my business with anybody else, all right, the better. Okay. I want control of it over everything. And I know there's a lot of people out there that can also resonate with that information, guys. Thank you so much. I hope I addressed all the questions that on there. I really think that I did. Sarah, thank you so much. Naela, awesome. Thank you. It's good to see you again. You support me every single week. And thank you so much, guys. I will sign off now. I'm going to enjoy the rest of my Friday evening. Guys, you do the same. Have a very good weekend. Good luck in your investment future. And I will see you guys next week. Thank you so much.